Hi, Robin here. How you doing? Good morning, good afternoon, wherever you are in the world. In the next 5 minutes or so, I'm going to look into my crystal ball and lay out some things that I think are going to change or may be at risk in the UK autumn statement. That's the budget from Chancellor Reeves. And also the recent inflation numbers in the UK and what effect that might have on either expats living overseas or people in the UK that are looking to move overseas in the near future. Okay, so first of all, the budget. Big black hole, we know that. It's been well flagged. 22 billion is probably the consensus, and I think that's what the government announced themselves, which is being blamed on the previous administration. However, some pundits are suggesting that Chancellor Reeves might need to raise up to £40 billion, and that's to plug various holes and put some extra resources into the NHS. Okay, so what might change? Well, my money for sure is on capital gains tax, probably the most likely to rise. Perhaps it might rise at a flat rate, so it's currently 20%. It might go up to, say, 24%, which is kind of the average in Europe, if I'm honest. Portugal 28, Spain ranges from 19 to 24. So that's pretty much a given. However, they may tag or tie capital gains to your income tax. So therefore, the people who earn more money, who are likely to make more capital gains because they've got a second home, or they've got art, or they've got, cryptocurrency, gold, stocks and shares outside of a tax wrapper. And it might be linked to income tax. So let's just see. Second, the kind of pensions are the elephant in the room, so to speak. The PCLS, so the pension commencement lump sum, is where you can take 25% of your pension tax-free if you are a resident in the UK. Now, there's kind of some rumours perhaps, or some noise that Chancellor Reeves will cap the PCLS amount at 100,000 and tax anything that you take out of that, or stop you taking out any more than that as an additional level. Now that sounds like a lot of money, but if you've worked for 25 years, that means that your pension pot, if it's above 400,000, which it could quite easily be with the huge rises in stock markets around the world over the last kind of decade, it could affect you. The other option that's been talked about, which I don't think will happen because it's going to be unpopular, is to cap the amount of PCLS at, for example, 50,000 or 75,000. I don't think this is going to happen. And anything you take out above that, put a standard rate tax of 20%. Okay, inheritance tax, there's going to be some tightening there, I'm sure. Inheritance tax in 2023 hit a record take for the government at 7.5 billion. So it's gone up every single year over the last decade. And don't forget, when you passed it, you can't vote, so there's no arguing. But I really do think there'll be some tightening of the exemptions around agricultural relief. So that is where some old buildings on agricultural land and houses and farms, etc., have got some exemptions against inheritance tax. And also watch pensions. There may be, but again I doubt it, a look at whether pensions should form part of your estate on death and be taxed as inheritance tax. That would be a big shake-up because it may change some major things within the pensions legislation. So I don't think that will happen, but you never know. Non-doms, okay, non-domiciles living in the UK, they're going to get hit. I guarantee, I will put money on this one. So non-doms, and especially ones who used to get taxed on the remittance basis, so that is basically where money remitted into the UK was all they were taxed on. For sure, they are going to get taxed on their worldwide income, just like everybody else in the UK. People that live in the UK and they might have income coming from, different sources, different countries, different companies, perhaps. Everything is taxed. So I really do think they're going to get hit. Also, perhaps some change to trusts and the way that people kind of circumnavigate taxes. Okay, so a couple of things there, and I'll come on to inflation in a second, but if you are moving overseas or you're thinking of moving overseas, it's essential to get good quality financial advice. So I'm a chartered financial planner. I work for Holborn Assets. I'm a partner. Holborn Assets are registered and regulated in jurisdictions all over the world, including Europe, including the US, including the Middle East. So, reach out. It's important to get good quality financial advice. So whether it's from me or it's from somebody else, you cannot beat it. It will always, always return you a good return. Okay, so what about inflation? I mentioned it to start with. It's dropped to 1.7. Surely that's really good news. Well, it's not if you're thinking of moving to Europe, for example, and you want to buy euros, because sterling is currently at it was at quite a good high. I mean, 3-year high against the US dollar. Immediately the inflation news came out, it dropped. So why did it drop? Well, because that signals that the Bank of England Monetary Policy Committee is likely to reduce rates because they foresee that inflation is coming down and it's under control, because it has to be under 2%, unless the governor therefore then has to write a letter to the Chancellor explaining why. So the likelihood of interest rates coming down is greater. So therefore sterling has dropped against the dollar and the euro. Okay, some good news though is that the UK state pension is increasing by 4% this year. It's on the back of a big increase last year, and I think it was 8% maybe the year before, but it's going to be approximately £12,000. It's a few pounds short of £12,000 a year. So that's really good news. However, one of the things that I think is at risk is the Class 2 contributions. So if you're living overseas and you're working, you can elect to pay national insurance in the UK and catch up on those missing years and continue to pay into the future at Class 2 rates, which are only £165. Now that's instead of £125. I think that's at risk. It wouldn't surprise me if the government stopped people doing that, because effectively you're buying back these years and you're getting paid a pension from the UK government, and you're not really contributing to the tax system, etc. Okay, so Robin Thornton, how do you get in touch? I'm a chartered financial planner. I mentioned that before. My contact details are on the screen now. robinthornton.com is my website. Lots of resources on there, lots of ways of booking a meeting for me. I offer a free 30-minute consultation to see if we can help you, give you some free advice, and if it all works out, great, we can move forward from there. I live in Europe. I'm an expat myself. I live in southern Spain. I've lived in the Middle East for a long period of time as well, so I understand the trials and tribulations of moving countries, and especially where a foreign language is involved. So my number's on the screen. My email address is robin@robinthornton.com. Anything at all, please reach out. If you're watching this on YouTube, there's a comment section below. You can book a free meeting there, and obviously subscribe. If you'd like to subscribe, I can then keep you updated as we go along. Okay, thanks for watching.